Hi guys, welcome back to Moneytize. It's time to record the new weekly preview. If we talk about the last week of December, which was the end of 2021, the markets were pretty sideways. There wasn't much action in the market, and we were expecting the markets to reopen on 3rd of Jan with full energy, the new money coming into the market. Unfortunately, even in the first week of the new year, 2022, the markets were pretty sideways, and but we had one major data release from the US. That is the employment report, the most important report, the preliminary report, which is the ADP Employment Report. It was released on Wednesday, and it showed a huge surge in the employment numbers in US. But the final numbers were pretty disappointing, which were released on Friday. The major problem is not about the vacancies. There are vacancies in the US market, but the manpower is not available. So let's see how things have changed and what is the new formation on the charts. Do check this video till the end because I've explained some key levels from where you can get into the markets. This video is basically about the four markets, the four major instruments. Number one is the US dollar. US dollar is recorded, reason being because among it impacts majorly all the markets, be it the forex market, the commodity market, or even the equities market. The second instrument is gold, third is US oil, and the last one is Nifty, especially for my Indian followers. Let's start the technical analysis. To begin with, we are starting with DXY, and as usual, we are on the weekly time frame. So, what has happened recently? It broke above this trend line, the resistance, sorry, not the trend line, the horizontal resistance, and then now it is coiling or consolidating within a very tight range since past 1 month. I've already marked the upper boundary and the lower boundary of this range. And as per the MACD, see the MACD moving lines are making a higher high. Okay, so there is no divergence on the MACD lines. The slowdown is only on the MACD histogram, number one. And if you check, the histograms are shrinking down, but they are still in the bullish territory. They're not in the bearish territory. Means they are above the zero line and they are still green. Let's check what's the scenario on daily. On daily, the MACD histograms are already in the bearish territory and they are showing some increase in the bearish strength. But if we notice, see these are the last two high points on MACD lines. And similarly, we have the two high points on MACD histograms. So there is no divergence. Both are making high and higher high. MACD lines are making high and higher high. Similarly, the price candles are also making high and higher high. So there is no ending divergence. It means whatever is happening right now, it is temporary and we still have some more room to the upside. So what I'm expecting, either it will consolidate in this range for a while, which it is already doing, because the correction may be a ranging correction or a clear deep pullback. It will keep on ranging until it reaches this rising trend line support. And once it reaches the rising trend line support, along with the confluence of this horizontal support. So this could be a place which is around 95.5, 95.6, and then we can see the upward momentum. This is the scenario number one. Alternatively, if it breaks below this horizontal line and reaches the rising trend line, it may take a support and bounce up, or If it breaks below the rising trend line, then this is the area where we can find the next support, which is around 94.5. Fundamentally, the things are getting better for US dollar. It should strengthen up because the economic data from US is coming in good numbers, which gives the US Federal Reserve the power to cut down the money supply. So cut down in money supply means increase in strength of the US dollar. So ultimately, there is no ending divergence. Plus, the consolidation will get over, and we will see bulls taking control in the near future. Let's move on to the next one, which is Xavu USD, meaning gold. In gold, it is really a very annoying scenario because this is around 1830, the major resistance area which it has not been able to break through. See, first attempt, then second attempt, third attempt, fourth attempt was temporarily successful, but ultimately it came down. And now in the fifth attempt, it could not break through. So, as per the given scenario and the MACD behavior, see, MACD have already given a bearish cross on the MACD lines, and the red histogram has started forming. So it gives me the hint that bears are going to take the control, but we are still above the rising trend line. So situation is really mixed up at present, with a slight, you can say, I can, yeah, with a slight hint that bears may take control. Bears may take control in the short term. If it breaks, if it breaks this trend line, then I can expect the market, the gold market, to make a retest of this trend line and take the new support around 1750, 1760. And if by chance they are able to break through, the bears are able to break through 1750 area, then ultimately, finally, they are going back towards the 1675 area, where it will coincide with the long term rising trend line, this one. So the situation, the bias is towards the bearish side as on date. Let's see. Ultimately, we are looking for a break from this consolidation, the annoying consolidation which has been going on for past like more than 6 8 months. So let's see. Moving on to the next one. So please, one second. Let me come back to the gold chart. Please pay attention to this area, which is around 1788. This one. This area is again the area of support, and we are seeing some sort of bullish candle formation. But if it breaks through this rising trend line, then ultimately the next area to look for is around 1750, 1760. And for the bulls to take control, we need a break above this 1830 resistance. As on date, the situation is looking in favor of bears because of the lower low formation on the MACD lines and MACD histograms. Okay, this is as per the 4 hourly chart. Now we are moving on to the next one, which is USD WTI, crude oil WTI. Okay, till my last analysis, till my last analysis, I was looking it to reach around 75 area, and then I wasn't sure whether it will rise up or come back. I was expecting it to make a head and shoulders pattern. Changing the chart to daily, now what has happened, it has reached this area. This is the supportive area, the candles, You can see the midpoint of this M formation, and now it has reached this area. So the price or the range which was as a support in the historical past, now it may act as a resistance, and we are getting some sort of bearish candle formation here. Number one. Number two, if you go to 4 hourly chart, we can clearly see the bearish divergence between the recent two highs. See, higher high formation on H4 and bearish divergence on MACD lines, also bearish divergence on MACD histograms. And this candle is a clear bearish candle. So I'm expecting a pullback at least toward this rising trend line and this area of support, which is around 75, 74.5 to 76. So this is how it can play out. Let it come down, take a support here. We'll see some bullish confirmation on the lower time frame, and then we can join for the next ride up. This is my analysis for the crude oil in the given situation. And if by chance it breaks above this high, the recent high, which is around 80, so immediate break above 80 will invalidate the short-term bearish plan. Otherwise, everything looks good for the short-term bearish plan for this pullback. One more thing which we have to pay attention to is it's still above this rising trend line. So let it break this rising trend line for the retest of this bigger trend line. Okay, so this is the short-term trend line and this is the major rising trend line. Let's see how it plays out, expecting it to break this one and come on to this level. Otherwise, if it directly rises from here, which is around 78.4, and breaks above the recent high, the bearish plan will be invalidated. Now let's move on to the final one, which is Nifty. I'm converting it to daily chart. Everything is going strong in the bullish direction, and this is the area of resistance. The area of resistance is between the two horizontal lines. 18067 is the beginning of the area, and 18200 to 300 is the end of this area, the zone. See, this is the zone of resistance. So what I'm expecting it to reach here, anywhere in this area, and get a pullback. The pullback should be, ideally it should be towards this midpoint. So this was the midpoint which we were waiting to be broken. It will act as support, and once this movement is completed, then we will take our Fib retracement tool, assuming it reaches 18200. Then we will take our Fib retracement tool and check the Fib percentages for the retracement. So it should come back somewhere around 38 to 50%. So it is coinciding with this support zone, which is around 17500. So more or less 17500 should be retested. Once the retest is completed, then we will look for the bullish confirmation on the lower time frame, 4 hourly and 1 hourly, and join the next bullish movement. All right, guys. So this is the plan for the coming week. Explain all the levels in the four markets I've given in my weekly preview. I hope this video was informative and helpful. It adds value to your trading plan. Wishing you all a very successful and profitable trading week ahead. Guys, show your support, subscribe to my channel, and hit the like